Hello, I'm Richard Murphy, and I've been asked to explain why I have been suggesting that banks are doing quite well out of the economic environment that coronavirus has created when most people, of course, are not. And I think that's a completely fair question and something that I haven't previously explained. So let me just offer that analysis. I've looked at a couple of banks to support the suggestions I'm making. They're Lloyds and Barclays, both, of course, UK high street banks. And in the third quarter of 2020, Lloyds was able to say that they'd actually returned to profitability, which they were delighted about. And when I looked at the Barclays results, if I took out an enormous provision that they'd made for yet more PPI payments because of their past mis-selling, they too had seen an increase in their profits in their third quarter of 2020. So over the summer of 2020, it's quite clear that UK banks were doing well, despite the fact that the economy as a whole was not. So why is that? Well, there's a very simple and very straightforward explanation. The government was, of course, injecting billions of pounds into the UK economy through the banking system. And so many small businesses, over 1 million smaller businesses and some not so small businesses, were applying to the banks for loans on which the banks took fees. But that wasn't the real reason why the bank's profitability increased. Every time a bank makes a loan, there is, of course, a chance that the customer will not repay. Now, that's inevitable. Some die, some go bankrupt, some are companies that are liquidated because of unforeseen and sometimes foreseeable circumstances. But whatever the reason, they cannot repay their loans. And so banks make provisions in their accounts. A provision is a charge for an estimated cost that's going to arise at some time in the future for the cost of these loans which are going to go bad. Now, what happened from March 2020 onwards was that the government began to offer guaranteed loans to businesses. Originally, they guaranteed 80% and 20% had to be borne by the bank or by its customer as the risk. And then, from midsummer onwards, they were offering 100% guaranteed loans to smaller businesses, which people, of course, queued up to take. But what actually happened was that very many small businesses, realizing that they were being offered cheaper loans with a government guarantee than they'd previously been offered by the banks without a guarantee in place, were then saying, well, please can I refinance my existing debt? So suppose we have a small company which had an existing overdraft of £20,000. It might go not to its existing bank but to a new bank. So if it had borrowed, say, £20,000 from NatWest, it might turn up on the doorstep of Barclays and say, can I borrow £50,000 on a government guaranteed scheme and use £20,000 of that to repay the NatWest loan? The remainder would be used to cover losses incurred during the course of the coronavirus crisis. The consequence is that Barclays ends up being owed £50,000, but with entire recourse to the government if it goes wrong. In other words, there's no bad debt risk in this money for Barclays. Some cost of attempting to recover the money, but no actual risk. NatWest, which previously was exposed to risk on this loan, now has no exposure at all. It's been repaid in its entirety. So the consequence is that the banks have been able to offload their risk from their loans to small businesses onto the government. And small businesses, knowing that this is a great opportunity for them, have willingly participated in this process to refinance their debt and, as a consequence, reduce its cost because the government loans are cheap, but at the same time pass the risk onto the Treasury. Who's won out of this? Well, of course, small businesses are running still, which is what we wanted. But the banks have also won enormously. Not only have they picked up fees, but their risk profile has gone down, their bad debt charges have gone down, and their profits have gone up. You could not literally make up a better environment for them than this. This is a one-way ticket to making money for them, and that's why the banks are doing so well out of coronavirus. And I suspect they think that's going to carry on for a long time to come. It's a good time to be a banker. It's not a good time for much else. But banks always seem to win, and that's one of the problems of our economy.
Thanks for watching this video. If you've enjoyed it, I'm pleased. If you want to see other videos like this, there are links below this screen. If you want to subscribe, hit the subscribe button. Follow me on Twitter as well, at Richard J. Murphy. Look at my blog, Tax Research UK. And if you'd like to donate, because this video series is being largely paid for by donations, there is a donations button on every single post on my blog. Thanks a lot.